we're going to be doing on Thursday when I come back, we're going to be doing 12.3a, 12.4a, and 12.5a. So our homework is going to be what, Elizabeth?
It would be the 12.3b.
Brilliant. I love it. You guys are starting to get this. I like where your head's at. Now, I don't know if this is the way Ms. Chow would tell you to, but this is the way Mr. Greer would tell you to. These are very similar problems. So we could sit here and spend all day recreating this thing, or we could use this thing and realize that it's going to tell us that we got the wrong answers at the end. Now, some of the names might be different. Like, for instance, it's not Michael Brady. This is going to be the 12A problem. But if we do our homework within this framework right here, we should be able to come up with some stuff. Domingo, I'm going to steal your book. Is that all right? Okay. Flip over here to 12. So if we go 12B, 12.3b, excuse me.
Page number?
It is on page 428. If you can look down here at the chart of accounts that's listed, it gives us our beginning balances for all of our trial balance here. You can also look on 12.3a. It'll give us our complete trial balance accounts right here on the given section. What I'm going to do is I'm going to put this thing down, and I'm going to start typing those in. So I'm going to put my name in here. Whoops. Oh, see, my name still changes. I can't do Mr. Greer. Mr. Greer 1. There we go. This is ACC102. What was the question, Lisa? We're working on B using A's template. Does that make sense? I'm telling you right now, we could recreate this thing, but instead of wasting all of our time, we're going to use the same thing, and there might be a couple of accounts that are a little different. I'm telling you as your instructor, I'll be flexible with you. I just think this is a much faster way. Plus, then you know what you're doing when you get to your test. So we're going to use the same template. Even though it says A, we're going to be doing B. And once again, if you do B correctly, you should be able to just go in and type in a couple numbers right, and everything should populate out properly and have all your formulas done if you've done everything right. Elizabeth, Domingo, did you get this?
Yes, I'm just trying to figure it out. This is the assessment, or this is the assignment?
We're doing the assignment in the assessment template.
Oh, got it.
It's kind of a mind pop. Laura, week 4, assessment 4. Click on the.
No, yeah, I know.
Okay, how do you what?
Where it says problem 12.3a.
Yes. You don't. That's what I'm saying. You can't change anything that's in the blue. Excuse you. No. That was quite a Memorial Day from Arkale. All right, so we're just going to go through. It says right off the bat here that cash has $26,460 as a debit. Accounts receivable doesn't have anything. Supplies has $740 as a debit. Prepaid rent, $4,200. We have prepaid advertising, $37.50. Now, I don't see any advertising in here, but I don't see anything that says prepaid insurance in the problem. So I'm going to use prepaid insurance as my advertising. Can everybody live with that?
Well, I can do
Is it like the Matrix? Whoops. Can we live with that? Prepaid insurance, we're just going to translate that into advertising. I know that's a hard one. I still see confused faces. We okay? Yeah? Okay. All right, furniture. Oh, look, we do have furniture, but it's office furniture. We'll take just furniture. Oh, wait, prepaid interest, $450. Office furniture is $48.40. Do we have any accumulated depreciation office furniture? Nope, but we do have equipment of $9,000. Any accumulated depreciation? Nope. Do we have notes payable? Yes, we do. It's a credit this time though of $2,250. We have an accounts payable credit of $4,400. Interest payable, nothing. Unearned consulting fees. Well, we have unearned course fees, but we're going to just consider that consulting fees. $22,000 credit. We have a capital account for $67,300, and we have a drawing account, which is a debit, excuse me, of $2,000. Then we have course fees. Let's see, salaries, expense. Expense is always a debit. Telephone expense, $120. And the entertainment expense. Let's put entertainment in utilities. Do we have a utility coming up here? I'm going to put entertainment as a utility. So $220. Now, how do we know if these are good numbers? What should be happening?
It should tell you at the end.
It should balance.
Yeah.
Now, we're in one of these templates that doesn't allow us to do any kind of formula. We see this? AutoSum is blanked out. We can't do it. So now we're going to go into this advanced stage of Excel where we have to be able to write the function. So I'm going to say this equals the sum, which is the same thing, use parentheses. If I drag up all the way to the top and I close my parentheses, it just totaled. So I'm going to do that again here. Equals the sum. We're telling it we want to add everything above here, close parentheses, enter. These two are equal now. It's adding up everything above it. Now it's going to tell me to try again. Why is it telling me to try again, Markale?
Something is wrong.
Why is the answer wrong? Because it's thinking it's the test, even though we're doing our homework in it. So we're going to have to be okay with that. So we just can't freak out. But if we were doing the test and we put in the right numbers, it would say correct. So tomorrow, if you save your homework, or excuse me, on Thursday, if you've saved your homework, you've done it all right, and then you save it as your assessment and you go through and you switch some things around, all of your sums should all be done. So it should already tabulate out. You'll know everything's correct. As soon as you put your numbers in, it'll come up and say correct. Then when we get to these, it'll do the same thing. Now this is the part I want to show you. We've only got 5 minutes left. But when we're doing our adjustments, this little section right here is for the letter. This is for the number. Letter, number. Letter, number. So we have the two little things that we're playing with in here. First one says on September 30th. So at the end of this month, because this is, and that's another important thing, starting right now for the rest of this book, we want to read the dates that we're dealing with because they're going to start giving us dates like down the road a little bit. So we might be doing something in May, but they're going to tell us something happened in February because we're supposed to calculate out 3 or 4 months of something. So we want to make sure we're paying attention and we're cognizant of the date. So according to this problem on 12/3, it says on September 30th, 2013, after 1 month of operation, that means this company's been in business for 1 month, the general ledger of Cross Timbers Company contained the accounts and balances shown below. Great. It says prepare a partial worksheet with the sections trial balance, adjustments, and adjusted trial balance. So we're not going to go all the way over here and do the income statement and balance sheet on this one. We're only going to do the first 3 sections. So I'm going to come back. And let's jump down to our adjustments on page 429. On September 30th, an inventory of the supplies showed that items costing $705 were on hand. So how much do we have in supplies when we're done? 705. Check this out. I'm going to come over here. I know my number is going to be 705. I know it is. So what do I need to do in order to get to 705 as a debit? If I started with 740 and I'm going to get to 705, how do we adjust that? A credit of what? $35, is that what you said? Yeah. We're going to take this number minus this number, just to make it a formula. Comes out as $35. Now, I figured that out with a formula. What I would probably end up doing for the sake of well, I'm going to leave it, never mind. I'd probably come over here and say this equals 740 minus 35, but I'm going to go ahead and leave that. Now, if I did 1A, what do I have to do also? Double entry. Double entry, Kendra. Amazing. Okay, so I know that I'm going to have another $35. Which one would it go to down here? Where would it go? Where's my other half of this entry? Supplies expense, exactly. So come down here to supplies expense, we hit A, and I'm just going to go like this, equals $35. I'm going to click on that, equals 35 up here. Here's another little tip. I can come down to this section and say this equals the sum of what? What do we want to add up?
The whole column.
Everything above it. So I'm going to add up everything up to here. And this one's going to equal the sum of everything up here. And we can see that we're in balance. It's really good after every transaction. These two numbers should match at the bottom. That means that we're still in balance. So what's B say? B, bravo. On September 1st, the firm paid $4,200 in advance for 6 months of rent. That was on September 1st. What's the date today? September 30th. So what have we used? 1 month of rent. Kendra, you get a star. So we've used 1 month of rent. How are we going to figure out what 1 month of rent is, though?
It's prepaid rent.
Well, it was prepaid rent right here, but how do we know what 1 month is of that?
Oh, that's easy, right away.
Well, how much did we prepay?
6 months, so you divide it by 6. Right?
Yes. This divided by 6 because we prepaid 6 months. So we hit enter, it's $700 a month. And where are we going to put that?
Rent expense.
Rent expense. What are you guys going to do without Markale? I don't know. Rent expense. Okay, we got 1 minute. Let's do C. On September 1st, the firm signed a 6-month advertising contract for $3,750. Right here, prepaid rent, or prepaid advertising, which we have in insurance, because we couldn't put advertising in there. And paid the full amount in advance. So have they used a month of that also? Yes. How do we figure that out? This equals this divided by what?
12.
No, it was a 6-month contract. Divided by 6, so that's $625. And we're going to do that is, since we had a prepaid insurance as prepaid advertising, we're going to come down here to insurance expense. Call that same thing equals $625. We're going to just go through all of these transactions and continue on. Now I'm going to record this. Let me go ahead and hit pause.
I was thinking you could maybe do one on the credit side.
Okay, so we're going to continue this now. We're going to be doing this in widescreen, so hopefully you can see this whole thing. And we left off at Charlie, so we're going to go on to Delta. And on September 1st, the firm paid $450 in interest in advance on a 3-month note that has been issued to the bank. So we had $450 that we prepaid in interest. It's a 3-month note. We're in September 30th, so we're going to divide it by 3. And that's going to be $150, I think, if I'm looking at that correctly. So we're going to go up and find this in prepaid interest, which is right here. Whoops, there goes prepaid interest. And I'm going to go ahead and come on over, put D for Delta 150, and then we're going to want to come down here and use our interest expense. Now there's 2 spaces which tell me in the problem that we have for our test, that we're probably going to have 2 interest entries. We'll have to figure that out on Thursday when we're taking our test. Let's see here now. E, on September 1st, the firm purchased office furniture for $4,840. The furniture is expected to have a useful life of 5 years and a salvage value of $340. So this is a little complicated to do. I'm just going to open up an Excel template, a new one here, so you can see how I would do the math for this. Essentially, we have our furniture is $4,840. Just grab all this really quick and do a little comma style so we can see it properly. So this is what our furniture is. We have a salvage value of $340, so we're going to subtract that off. This gives us our depreciation value, so $4,500. It's going to go over the course of 5 years. So I know that's 60, but I'm just going to show you 5 times 12 months. So 5 years times 12 months gives us 60 periods. And I'm going to take that 60 and I'm going to divide this 4,500 divided by 60. And that gives me $75 a month. This is the number I'm trying to do. So each month, my office furniture depreciates $75. I'm going to jump back in here. So we have our furniture depreciation, office furniture depreciation. So E, and we're going to accumulate $75. Perfect. And we need to come down here for our depreciation expense and put that in for the furniture. It's going to equal that same amount. Both columns at the bottom are still equal. That's important. Now on F for Foxtrot, it says on September 3rd the firm purchased equipment for $9,000. So let's go back out to that same little spreadsheet we had, because we can just change some of these things. So we purchased it for $9,000. There's going to be a salvage value of $1,200. So I'm going to put purchase price, salvage, that way you can see that, depreciation value. There we go. And comes out to 130, because it's 5 years also. We're going to have $130 a month because my formula was already built in there to take and do all this math automatically, which is divide those two numbers together. Great, so 130, away we go on to this, and we're going to say accumulated depreciation for office equipment for F is 130, and we're going to say F down here, and this one equals the 130. Great, it's looking pretty sharp. Let's go on to G. On September 1st, the firm issued a 2-month 8% note at $5,250. All right, this one's a little different. So what we're going to be doing here is we're going to have the firm issued a note. Well, it sounds backwards here, but that means that they took out a note for 2 months, and they're going to owe the interest on it. So I'm going to jump back over to my little calculation here. And if you remember, we talked about in class, we talk about how to get interest, and that's principal times rate times time. So I'm going to go ahead and put that in here. Principal times rate times time. So our principal on this note is going to be $9,000. We're going to multiply that by 0.08, and our time, well, let me just pop this thing out here. So 8%, and in fact, if I do 0.08, then I can click percentage, and that way we can see exactly what the percentage is. And the time, now we're doing this on September 3rd. We're doing this on September 30th, and we took out the note on September 1st. So that means we have 1 month that's gone that we need to account for. It was at 8%, so we're going to do this 1 month of 12. And I'm probably going to need to, that's not actually a 0. There we go. We can actually see that's the same thing. So our interest is going to equal this times this times this. $60. All that math just to come out with a lousy 60 bucks. That's all right, we can deal with it. So let's jump over and put $60 in, and that will be into interest payable because we're not actually paying it, we're going to owe it. And I just realized that I did the wrong amount. So let me jump back over here. It's actually not $9,000, it's $5,250. So what we come out with is $35 of interest that's payable. So I'm going to jump back in, and I'm going to put in $35 of interest payable, and that means that we're also going to have another interest expense on G of $35. Perfect. So we still have 1,750 on both columns, so that means we're still in balance. We're almost done. We have H to go. So H, our last and final adjustment, is going to have to do with unearned income. So during September, the firm received $22,000 in fees in advance. So that means they gave us the money before we earned it, kind of like an attorney would. An analysis of the firm's records show that $7,000 of that applies to services provided in September. The rest pertains to future months. This is really easy. So we have $22,000 right here, and we actually are going to earn some of that. And how much are we going to earn? Well, the problem tells us $7,000, and that's going to go into consulting fees. I think it's course fees according to the problem that we're actually on. So we're going to go ahead and put H here. It's going to equal that 7,000. And we are done with adjustments. Now this is, I would say, the hardest part of all of this. Now all we have to do is bring all these numbers back over, and if there is nothing in between, which this one doesn't look like there is, I can say this equals 26,400. Great. This one equals, well, there's nothing there. I'm not even going to do anything. We've already done this one because that was part of our problem. This one equals this plus this minus the credits. So we're going to take a debit balance, we're going to add any debits to it, and we're going to subtract any credits. It's going to come out with the amount that's due there. I'm going to drag this down to the next couple here, and that's great. I'm going to go over to this credit one and do the same type of thing. So I'm going to say this equals, this has got to be a contra account, so it's going to be a credit all the time. This minus any debits plus any credits, because we started with a credit balance, so we're going to add this one this time. Hit enter. And now I can just grab this and hit Control C. I've copied it. Anywhere where I see a credit balance to start, I can go ahead and throw this in. Oh, and I've already seen an issue. On H, I screwed this one up. I'm sorry. This should be 7,000 here. And this one should be 7,000 over here. That makes more sense. And you notice because I used a formula, it automatically recalculated this number right here, which is perfect because that's what I needed it to do. And let's go ahead and throw this in. And everything else looks like a debit balance, so I'm going to go up and grab this debit. And anywhere that there is a debit, I'm going to go ahead and drop this one in. There's one. There's one, there's one, there's one. This one I'm actually going to write out. I'm just going to go ahead and say this plus this minus this. And the reason I'm doing that is because I don't want to ruin my formatting. And if I were to copy this one down, it would get rid of my line. And I like my line. So let's see if we got this right. In theory, we had these totals, we made some adjustments, and now we should have a different total. Let's go ahead and write our formula out here. Sum. We're going to grab everything up above. Close parentheses. Equals sum. Moment of truth right here. Let's hope we did it right. All the way up. Close parentheses. Tab. Oh, look at that. Those two match. So that is a correct answer. Now this is problem 1, or excuse me, problem 3, and we actually don't have to go any farther than this. So we are completely done with this one. We don't have to go on to the income statement or the balance sheet, but we will with number 4. So let's go ahead and switch over. I'm going to flip my page here to go to 12.4 B, and I have to see if I can read these pictures I took here. We're going to go ahead and we're going to start out with all of the basic things that were given to us in this problem. I am just trying to see if these are the right adjustments here. Merchandise inventory. Okay, I found the right problem. We need to go through on 12.4b and input everything in here so that it comes out with that balance that we were looking for. So let's go ahead and start with the cash balance, which is $26,400 debit. Accounts receivable is $22,700. Merchandise inventory $138,000 to start. Oops, I got one too many zeros in there. It's a shortcut key. I don't know if you saw me just do that. I went up here. If you hit F2, function 2, it automatically gives you access into the cell. It's a little keyboard shortcut for you. 11,600. Prepaid advertising is 5,280. Store equipment is 32,500. Office equipment is going to be 8,400. I'm going to skip all the way down to the drawing account, and I think the person, the one that we're doing, is actually Janie Fielder. So she has 100,000 that she's withdrawn. Then we skip sales. We go to returns and allowances of 17,200, purchases of 507,600, and rent expense of 125,000. These are all given to us, so we just input them in the right area. We want to make sure we're on the right side for debits and credits. Telephone expense, salaries expense, payroll tax expense, and then an advertising expense. Then I need to put all my credits in. Let's go ahead and start off here. Allowance for doubtful accounts is $320. Accumulated depreciation is 5,760. This one's going to be 1,440. Accounts payable, we owe $8,600. Then we have some Social Security tax that's payable, 5,920. Medicare tax payable, $1,368. Federal unemployment tax, we don't have anything of, but capital, this is Janine Fielder again, it's $112,250. Sales are good old $1,043,662. Finally, we have purchases, returns, and allowances of $5,040. Whew. Okay, so we typed in all those things. You can hit pause if you need to catch up and just make sure they're all filled in properly. But that's what this looks like. Now, if we wanted to make sure that this was the correct amount, we could just come over here and do a sum. Parentheses. Let's grab everything, make sure it totals up. Equals sum of parentheses. And we're going to close parentheses there, hit enter. Those are the same number. Now, total brought forward is going to be the same amount. So we're going to just say this equals the amount above, and this equals the amount above, and then down here if we have any uncollectible accounts expense, which we don't, but we're just going to go ahead and say that the totals right here equal this above and equals this above. Now once again, this is going to say try again because it's referencing the test. But if you do all these formulas right, you should be able to just come in, plug in your numbers, and that will automatically go to correct. Because your formulas are going to do all the adding for you. Excellent. Jumping on to the next one here. Let's move into our adjustments. Now we talked about the slush fund and merchandise inventory and income summary in class. But this is going to be our first time that we get to try it. So adjustment A talks about merchandise inventory at the end of December 31st is $148,000. This is important. So right now it's $138,000. And at the end of the year, it's an additional $10,000. We're not going to do anything right here, right now. We're going to come over here and we're going to put in that $148,000. And then we're going to do the little accounting trick that I taught you in class, which is simply A is going to be to bring over this amount. We're going to get rid of it. We're going to blank it out. So we're going to do a credit. Now where do we put that? Oh yeah, Mr. Greer told us. It's income summary. This wonderful little slush fund account that we have is going to be a little tool for us. And now B. For B, we need to get that $148,000 over there. The way we're going to do that is we're just going to put it in. But we have to have that second transaction to have this all balance. Voila. So now we have, if I can just grab all this again here, copy, no, that's not going to work. This one will work. Copy that one, paste it here, and we'll deal with the rest of it later. So we're in balance. We did A and B that quick, but just look, they cross each other. We're going to take this amount again. We're going to do the little arches. Remember, we're going to jump this over to credit, and we're going to put the amount we need, and we're going to jump that over to debit. And we have to do corresponding entries down below. So that's how that was working right now. Let's look at Charlie. During 2013, the firm had net credit sales of $440,000. The firm estimates that 0.7% of these sales will result in uncollectible accounts. So we need to take 0.7% of the $440,000 of sales that they had. We are going to do that right up here, and we have allowance for doubtful accounts. It's going to be a contra asset account, so we need to have this obviously over in the credit side. And we're going to say this equals, I'm going to go ahead and type out my formula here, even though it's probably not going to remember it. 440,000 times 0.00, we're at 0.7. So just like 1%, we're 1 past 1, so it's 007. Which gives us 3,080, and we need to put this as a double entry, so we're going to go down to uncollectible accounts expense, which is actually down below here. Say this is C, and it equals what's up here, which is $3,080. So now we're going to need to excuse me, we're going to need to do this little math equation a little differently now. Because now that we have this here, we might as well see if we can keep this whole thing in balance, correct? What we're going to do here is we're going to do an equals, and try to see here, yeah. Actually, we're going to come back to that. We're going to leave this just like it is, but this comes down here, and this comes down here. I like it. Excellent. And we'll notice that these two are not equal, so what we need to do is take this, and we're adding everything up on all these columns. That plus that equals this, And there we go. Now we're back to being equal again. So everything's in balance. As hideous as it looks. Let's go on to D for delta. On December 31st, inventory of the supplies was taken, showing that items costing $2,960 are on hand, I believe is the number. So 2,960. So we can just come down here to supplies. We know that we're going to have $2,960 remaining of supplies. So we're going to come over here to D. We know that we're going to naturally have to take away a number. I'm going to say 11,000 minus 2,960 comes up with 8,640. We're going to expense all of those supplies. So we're going to come down here to supplies expense. And that's just below income summary. So D, this is going to equal that 8,640. Perfect. So we've got that there. Let's go on to E. On September 1st, the firm signed a 6-month advertising contract for $5,280 with a newspaper. The full amount was paid in due. It was paid in advance. So let's look at prepaid advertising. We're at $5,280. Now, the trick here, and I told you guys in class you're going to have to start looking at dates, is that this is September 1st is when they signed it. Now we're at the end of the year. We're December 31st. So they paid $5,280, which we still see is what's on the books right here, $5,280. So that's telling me that they have not expensed any of this out yet. How do we figure out what is going to come? So we're going to go ahead and hit E for echo, and this equals 5,000, and I'm going to go ahead and put this in a parentheses here. Parentheses 5,280 divided by 6 months times 4 of those months. That should give me 3,520. And now the tricky part is when you do that and this kind of thing, it won't come back. We don't actually have a number here. So that's a little rough, but that's fine. We can deal with it. So we're going to go down to advertising expense. We're going to hit E. We're going to say this equals 3,520, and it's down there. Great. Foxtrot on F. So on January 2nd, 2012, so this is a year before, the firm purchased store equipment of $32,500. At that time, the equipment was estimated to have a useful life of 5 years and a salvage value of $3,700. Now, if we go up and we look at this store equipment, they bought it for $32,500. We see that they've already depreciated out quite a bit. I would actually bet that they're doing their depreciation at the end of the year. And in fact, in order just to test that, you don't have to do this. I would say this times 5 is going to be, ooh, we're getting close. And they said it's a 5-year, yeah, 5-year useful life. So, oh, but there's a salvage value in there also of 3,700. So we've said this equals this times 5 plus a salvage value of 3,200. Is it 3,205? I can't really read it right here. Salvage value of, well, what we can do is we can know that it's going to be the same every year. So we're going to assume that this is the amount they paid last year for 2012. So I'm actually going to just add the same amount in there. So I'm going to say this equals 5,760. That's for F. Now you could go through and do the calculation, which would mean that we would come over to our other sheet and we would say that we purchased it for $32,500. The salvage value is $3,700, I believe, and that's a 6-year thing. Now, instead of dividing it by 12 and having 60, I think what we're going to have here is we're going to actually multiply this number by 12 to get the yearly amount, which is 5,760. So that's the number that we would need per year. And there it is. So we're going to do some depreciation expense of the store equipment. This is F, and it's going to equal 5,060. Perfect. G, as in golf. So G, on January 2nd, the firm purchased office equipment. Same concept here. Now, just because we went through and did all that, we could, in fact, I will just to prove it to you, we can go over to the book that we've created here. We can say that our purchase value was $8,400, that we have a salvage value of $1,200, and we can see that our yearly amount that's going to be depreciable right there is $1,440. If I go back in here, I can see, oh, look, they've already depreciated $1,440 the first year. So I can just grab that same number, and this time I'm actually going to just say equals that number. And then I'm going to come back down here, do my depreciation expense for office equipment, equals 1,440. Getting close. We have H, I, and J left. H, on December 31st, 2013, the firm owed salaries of $8,000, which will not be paid in 2014. So this is one of those payroll periods that actually ends in December, but we still have like another week before we're going to pay them. But we have to record the amount of money that's owed to them in the year that it is owed. So we're going to go ahead and come on over, and we're just going to record this one. We're going to say that we owe for H, salaries payable, and I'm looking for salaries payable right here. So this is H, and it equals 8,000, because that's what the problem told us. And we're going to put that into a salaries expense right here, and this equals 8,000. Excellent. G, or excuse me, I, it's getting late. So I, on December 31st, 2013, the firm owed the employer's Social Security tax, which was a 6.2%, and Medicare, which is 1.5%, on the entire $8,000 of accrued wages. Now this is one of those things where we have two entries. One's going to be for Medicare, one's going to be for Social Security. So I'm actually going to write the formula. Say this equals this times 0.062%, and this equals this times 0.0145. That gave us two numbers right there. We have no decimals, so that's a nice thing. And we're going to come down. Oh, and I'm sorry, this is I and J. Juliet. And down here in payroll taxes, we'll do I and J equals, that one equals that one. All right, we finalized all of our adjustments, and we balance at the bottom, $317,052. I feel like I am missing something. Just make sure I did. I did miss something. We need to do federal unemployment tax. So let's go ahead and add that. What I'm going to do here is I'm actually going to, I was both of these numbers put together. So I'm going to put two I's. Sorry about that. And this will be deleted. And this I equals this plus this. So this is a compound entry. You have two things going into one. 612. Then we have federal unemployment tax and state unemployment. I'm going to call those both J. These are going to equal 0.8% for the federal unemployment. So we're going to this times 0.008. And this one's going to equal this $8,000 amount times 5.4%, so 0.054. And then we're going to combine those two down here, equals this plus this. There we go. So now we have it, $317,548. That is what our balances should be on both of them. we're now going to put together our adjusted trial balance. I think that once you get to this point, everything else is super simple. So we've done all the hard work for these problems, or for this problem. So what we want to do now is put together a formula. This equals this. And I'm going to leave that one alone, but this one I'm going to do the full formula. So this equals this plus any debits minus any credits. Excellent. And this one is a credit balance, so we're going to say this equals the credit balance minus any debits plus any credits. Now we are going to kind of use these as we go down the line. So I'm just going to grab and copy this one, and anything that has a debit balance to start, I'm going to put this on there. This makes it nice and easy. I'm just hitting Control C to copy the first one, and then Control V as in Victor to paste this down. That's a paste function. Good, I like that. I'm going to come back to that one. This one I'm going to do on its own again. And we are going to bring across both of these accounts. This is the weird one on an income summary. We bring across both income summary accounts. I'm going to go ahead and just copy this formula. Hit paste and hit paste. That'll add those up. I'm going to copy this one and hit paste and hit paste. I'm going to copy this one, hit paste and hit paste. And now we need to do all of the credit side here. So we're going to grab this one, hit Control C. And we're going to leave that one alone. These are all normally debits. This is a credit, so we're going to paste that one. We're then going to paste this one. We're going to paste that. 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 Going down, we're going to paste the capital account. We're going to paste the sales. And we're going to paste the returns and allowances. Which, if we look down here, everything is equal once again. Now here comes the hardest part after we've done the adjustments. Understanding what goes in the income statement and what goes in the balance sheet. That's what we're dealing with here. What goes in the income statement and what goes in the balance sheet. I think the balance sheet is the easiest one. So I'm actually going to start there because I think that's the simplest one to understand. And that is easy because all we're going to use is assets, liabilities, and equity, plus our drawing account. So I'm just going to jump across here and say this equals everything right there. So copy, paste, 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 paste. Store equipment, we're still on assets. Still on assets. We're going to go down to payables, which is all liabilities, capital, and drawing account, which is our final one. Drawing is where it stops. So from here down, everything else should be over here in the income summary, or in the income statement. I'm also going to say this equals 3,400. Copy that one. Paste, 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 paste. Great. Now we're going to come over here. We're going to keep everything exactly where it is. We're not transposing anything. So we're going to keep all the credits, credits, all the debits, debits. Scroll down here. And let's go ahead and grab all of the, oops, hit equal, grab all the debits now. Copy, paste, whoops. Equals, this one's not going to let me do copy and paste, that's fine, I'll just do it this way. Equals this. Yeah, I don't know why it's not letting me do it, but that's right, some of these forms are a little weird. Now, we are getting close to our, whoops, I went one off of that one. We're getting close to our income summary. Income summary, we bring both over. Don't forget that. This is where we're going to get rid of it. So this is where it all clears out and makes sense when we get finished. Equals 1,440. We want to do our sum of everything above. You don't have to go all the way to the top, but I just like to go all the way to the top just to know that I am calculating everything. Now, don't worry, these are going to be off. You're like, oh no, they're way off. It is okay. So we're looking at this, everything looks fine. We then want to bring these numbers down, the ones that are above them. And we need to bring across this 3,080. We're going to add that in. Equals this plus this. All right, so here is a fun little thing. We have a discrepancy here. The discrepancy is what is going on with the difference here. We have a pretty stark difference in amounts. And I am trying to see if I've typed all these in right here. So we have 1,000. Oh, that explains it. I did that copy and paste up here and it screwed up this number. So I'm just going to say this equals there we go. I'm feeling better about it already because it brought it down to a lot closer numbers. That was a odd flag that we had going on there. So we got that. Did I copy that one over? Good. I'm just checking my numbers here really quick. Just want to make sure I've got everything in here properly. It looks pretty good so far. Now, when we look at the bottom of this equation, we will see that we're off by a certain amount. That amount, the difference between this right here and this is what we call net income. And that is this line right here. So this is the profit that we've made. Now if it were over on this side, it would be a loss. But because it's on this side, this is a profit that we've made. So I'm going to take this number minus my debits, and I come out with $187,674. That is my net income. So I'm going to add these two together. And I'm going to do the same thing over here. This plus this. And we'll see that they balance. The only problem I'm going to have now is I've done an entry with no second, no double entry. I've added a number without doing a double entry. It made everything work here, but I have a problem. This is another little trick. We're going to kind of make a rainbow as it comes over here, and this is where we put the double entry for that net income. And if you think about it, what we're doing is we're taking our net income, we're folding it into our statement of owner's equity, and then through the capital it ends up on the balance sheet. So this is exactly what happens with it in real life in accounting. We want to do our sums, so I'm going to go ahead and just over here and say this equals the sum of everything above it. Close parentheses that. This is going to equal the sum of everything above that. Close parentheses. Bring these numbers down. We don't have anything right there, so we're just going to continue these numbers down. And I bet we're going to get something magical if we add these two together. It looks like the same number. Bingo. So we've just got 342,700. I'm just trying to see if these are all correct. Yep, 340. Yep, 720. This is it. So we've now completed this problem. And as you can see, we've just, the big things to remember are income statement. We go all the way down here blank with nothing until we get to our sales or our fees. And then that's actually where we stop with the balance sheet side. Tally them all up, make sure we jump the net income across, and we are good to go. So that is problem 12.4a. Now I'd love to tell you that I have time for 12.5, or 12.4b, sorry, that was B. I don't have time to do 12.5 with you, but this problem is also a doozy. It's a lot like 12.4. You're gonna have to go through and make sure you put all your account balances in, and then proceed to do all the adjustments. I'm going to ask you to do that in groups as you're in class so that you guys can explain it to each other. Refer back to this video if you need to. It'll explain and reiterate what we did in 12.4b. Anyway, I hope you guys are doing all right, and I will see you on Thursday in class. Thanks.